Jeff, it's great to have you back on. What are you watching right now? Let's start with chart number one.
Well, chart number one is a little more short term, but we just kind of pulled this one out thinking of things to do for the summer, and we were shocked when we broke the months of the year down by first half, second half. It revealed pretty starkly that the first half of July is actually the strongest period of the year, followed by December, the last half of December. So I was pretty shocked by that. I knew it was firm, but to see it actually overtake the last 2 weeks of December is pretty telling. So we're in a pretty good spot here short term. We tend to get decent seasonality into earnings season, and then it starts to waffle a little bit on us. So, from a very short-term perspective, I think things are in good shape. We'll probably have some seasonal tendencies and some softness in August, September, and then kick things back in at the last half of the year.
Okay. And one of the other things you're watching very closely is credit spreads. We know they've performed very strongly, perhaps surprisingly so, given some of the mixed macro data we've talked about and what you would expect to see in a high interest rate environment. What are the charts showing you here?
Yeah, no, you're exactly right. It's one of those things where, had you told me 3 years ago where the Fed would be today, I'd say credit spreads are going to be 300 basis points, and they're not, and they continue to look good. And this is just one example. We look at a lot of different ways to try to skin this cat, and they're all saying the same thing, which is there is ample amount of liquidity in the system for the economy and so far for the markets. And it's stabilized, but it's stabilized at a low level. It hasn't turned higher. And I think that's good news. And this is one of the things that the bears really missed over the last 18 months, was just how well credit was performing. And they kept these bearish arguments going. And the credit spreads were giving an awful lot of information. And I think they continue to give us bullish information today. We'll see where this stands in September, October. But that'll be one of the things that we watch for the back half to judge the duration of this rally and how long this bull market has to go.
Now, what about the NASDAQ 100? You think Bitcoin is the canary in the coal mine for it?
So, yeah, this is a little more complex, but we look for symptoms of liquidity, right? And those credit spreads are one example of that, and they tend to align themselves pretty well with the economy. But Bitcoin is what we call concept capital, right? There's no real use for it. It's, there's a lot of philosophical arguments around it, but it takes, ample liquidity to drive those things. And what we haven't seen out of Bitcoin over the last, roughly month or so is a new high. It's been consolidating. It's just moved back to the 200-day moving average, so it's still in trend. But if it breaks down, there is a relationship between the performance of Bitcoin and that of the more speculative assets in the market, and we label that the NDX as an example. And so a breakdown in Bitcoin is certainly something that would be unwelcome from our perspective in terms of what the implications are for the NDX going forward. So I think it's important. 55,000 is a big important number for Bitcoin. 72,000 would be a breakout and confirm the uptrend, which would be welcome news for the bulls and the back half of 2024.